ICOs are a new way for startups to get funded. Before launching their company, they sell tokens to investors. Most of the investors use the cryptocurrency Ethereum to pay for them. These tokens are a sort of voucher which the investors can later exchange for special services or products. Anything from gold to diamonds to a timeshare in Florida. The investors hope that the startup becomes very popular. That way, their token would become more valuable for other people, and they could sell it to them for a profit. Think of this as a country club that hasn't been built yet. In order to enter the finished club and enjoy all of its gratifications later on, you have to buy a membership. All members are getting a member's card to show they are part of the club. A country club is very exclusive, so the number of member cards given out is limited. But a lot of people really want to be part of the country club. They would even pay more than the membership fee to get a card. People that are already in the club could sell their card to them for a profit. Some of them will decide to stay members of the club though, but they have got to keep in mind. There is no telling if the clubhouse is actually going to be built in the future. Just like there is no telling if a startup will actually, well, start up.
What does having a transaction that is trustless really mean today? With cryptocurrencies, it means people from around the world who don't know each other and potentially are anonymous can confidently transfer value without intermediaries instantly verifying the authenticity of that value. With Bitcoin, for example, that value is based on finite supply mined out with hashing power. Today, as proof, we have mobile and web tools, as well as developer environments that allow people to leverage the power of cryptocurrencies on the blockchain for transferring fractions of houses, debt, other cryptocurrencies, and equity. We are working to introduce the Assurance Market Protocol on Proof to bring trustlessness to real-world assets transactions. With AMP, anyone can become featured on Proof by securing insurance of 50% or more of their initial listing price. Investors can take solace in this security when they invest. However, if an underlying asset disappears, insurance funds provide some protection against losses. But there's more. Independent speculators can spot bad investments and bet against them in a decentralized prediction market. When event validators confirm breach of expectation, speculators are rewarded for their research. The investors can see these risk signals from speculators before investing. This creates a self-regulatory environment, potentially more efficient for investor protections than what we have today, thanks to smart contracts.